Top 5 things to do before April 15th, 2025. 1. You must answer the digital asset question on your tax return. Right near the top of your individual tax return, Form 1040, the IRS now includes a critical question. At any time during the tax year did you A. receive, as a reward, award, or payment for property or services, or B. sell, exchange, or otherwise dispose of a digital asset, or a financial interest in a digital asset? This question is not rhetorical. You are required to answer it, and accuracy is essential. You must check yes if you sold cryptocurrency for fiat currency, for example, Bitcoin to USD, traded one digital asset for another, for example, ETH for SOL, received crypto from staking, mining, airdrops, or as payment for services, used crypto to purchase goods or services, or sold or traded NFTs. If, however, you only purchased and held digital assets without using, trading, or selling them, you may check no. But when in doubt, consult a tax professional who understands the nuances of digital assets. 2. Report all taxable events even if there's no profit. Taxable events involving digital assets are not limited to profitable trades. The IRS clearly states, if you have digital asset transactions, you must report them whether or not they result in a taxable gain or loss. Key taxable events include selling or swapping crypto assets, using crypto to pay for goods or services, receiving income from staking, mining, or airdrops, and minting and selling NFTs. Capital gains or losses should be reported using Form 8949 and Schedule D, while income from crypto-related activities may appear on Schedule 1 for supplemental income or Schedule C if you're self-employed. Importantly, even receiving a digital asset without selling it, as in the case of airdrops or staking rewards, can generate a tax liability because it is treated as ordinary income upon receipt. 3. NFTs count too, and some may be taxed as collectibles. Non-fungible tokens, or NFTs, represent unique digital assets often associated with art, music, or digital media. IRS guidance, Notice 2023-27, clarifies that certain NFTs may qualify as collectibles under the tax code. This matters because gains from the sale of collectibles are subject to a maximum 28% capital gains tax rate, which is higher than the typical long-term capital gains rate for other assets. So, whether you're flipping a profile picture NFT or holding a tokenized piece of digital art, you must report any gain or loss. And if the underlying asset is considered a collectible, the tax rate may be higher. 4. Offset gains with losses using tax loss harvesting. If 2024 was a difficult year in the markets for you, you may be able to reduce your tax bill through tax loss harvesting. This strategy involves realizing losses to offset realized gains. You can offset capital gains with capital losses dollar for dollar. Deduct up to $3,000 of net capital losses against ordinary income. Carry forward any unused losses to future tax years. This applies to altcoins that plummeted in value, NFTs that became illiquid or worthless, DeFi tokens or projects that failed, rug pulls. The IRS also issued guidance in 2023 that may support claims of loss for worthless or abandoned assets, though you should speak with a tax advisor about how best to apply these rules. 5. Keep records and know your basis. One of the most overlooked aspects of crypto taxation is record keeping. You, as the taxpayer, are responsible for tracking the following: date of acquisition and sale or disposition, cost basis, the original purchase price plus fees, sale price or fair market value at time of use or exchange, wallet addresses or exchange transaction IDs. This information is required to calculate your gains or losses and to determine your tax liability. Keep records. Calculate your capital gain or loss. Determine your basis. Report on the correct form. To make this easier, consider using digital tools such as CoinTracker, Coinly, or TaxBit to aggregate and reconcile your transactions across wallets, exchanges, NFTs, and decentralized finance, DeFi platforms. Don't forget to hit like, subscribe, and share. Thank you for watching.